Don't forget to breathe. Breathe in. Oh, geez. Hey, listen, we're having a tale of two cities right here. It's a tale of cities moment in retail right now. It was the best of times. It was the worst of times. It was the spring of hope for the select few winners. It was the winter of despair for everybody else. Now, look, lately, I have spent a lot of time focusing on a modified plank because my back hurts. I can no longer do the long plank that I did 5 years ago. But I've also spent a lot of time talking about the winners in retail. I mean, you got the huge change with the clout to strong-arm their suppliers and eating the cost of President Trump's tariffs. Think Watch, that's Walmart, Amazon, Target, Costco, and Home Depot. And you got the trade-down plays, like the off-price chains and the dollar stores. Like, think TJX or Burlington Stores, Dollar Tree, Dollar General. But after listening to Lululemon's executives talk about a truly blowout quarter, we need to add a third category of winners, the experiential retailers. As they explain on the call, if you're ingenious, if you engineer growth, that's their term, you can get the job done even in this environment. Now, don't get me wrong. My initial thesis still holds. The power of Walmart, Amazon, Target, Costco, and Home Depot is absurd. They've been able to hold the line on price and cram their suppliers, many of whom are still sourcing from China. Target's the smallest member of Watch, and they just told their suppliers to suck it up and absorb the cost of the tariffs. That tells you all you need to know. Meanwhile, we've seen some astounding numbers from the dollar stores and off-price chains. Dollar Tree talked about how it's mitigating the impact of the tariffs through better sourcing, clever tricks like figuring out how to pack a container with more merchandise. As for off-price, Burlington's it's crushing it, precisely because all those mall-based department stores are struggling. They buy up the excess unsold inventory for a fraction of its price and mark it back up and sell it to you at what's still a huge discount. That's why Burlington's quarter last week was so stupendous. But Lulu is a horse of a different color. This company's integrating itself into the fabric of society, no pun intended, with innovations like their new store that they've got in Lincoln Park, Illinois, where CEO Calvin McDonald waxed eloquently last night about connectivity with our community, both inside and outside the four walls of our store. End quote. I think connecting with the community is the key to generating traffic these days, although the only companies that seem to have a good handle on this are Lulu and RH, the old Restoration Hardware, which, as I mentioned earlier at the top of the show, reports this week. The Lincoln Park Lulu experiment has dedicated space to, quote, sweat, grow, and connect all under one roof, end quote. Meditation rooms, locker rooms, showers, health food, fuel. It's got it all. And that's a very strong category to tie yourself to. The template is so effective, they're also talking about putting it in the Mall of America. Plus, Lulu's got a new deal with Barry's Boot Camp. It cements their ownership of real deal workouts. And hey, it's global. The company has powerful annual Sweat Life festivals. Sweat Life Festival, and I'm sweating, so maybe that's what it is about. In London and Berlin that bring people into the stores. They back marathons, which CEO Calvin McDonald says are fantastic examples of how we're bringing innovation to guest engagement. Lulu's relentless focus on what they call this science of feel and their desire to solve sweaty problems for athletes reminds me of the innovative ways of the old Under Armour. They know the internet, always have. They now offer buy online and pick up in stores. That's called BOPUS, but with them it should be B-O-PUS. Think about that. Finally, perhaps best of all, Lulu is a China winner. They called out particular strength of the People's Republic with over 70% e-commerce growth. That's right, 70. I plan to add 15 stores this year. But unlike many other apparel plays, Lulu is quick to diversify its sourcing away from the PRC. Now, in the U.S. stores, it's only 6% exposure. Look, I know there are some attractive brick-and-mortar retailers from a point of view of what looks like value. Macy's, 9.8% yield. Kohl's, because of its time with Amazon, you can return your Amazon bought goods in person at the stores. But that idea has not worked as I would like it to for my Travel Trust. But if you want growth, you need that experiential factor. I mean, real experiential, not the kind of faux, all-talk experiential that everybody in the industry claims they have. Lulu's got it, and they got it for real. And that's how you can put up 15% same-store sales growth, and it's why their stock remains a buy, even though it's already up more than 60% for the year. Stick with them.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.